Good evening, councillors, and welcome to this first meeting of the Governance Scrutiny Group under our new Scrutiny Group regime. Can I welcome you all, and can I also welcome once again Chris Williams and Ian Dare of our internal auditors, RSM, and also can I welcome David Hoos from Mazars, our external auditors. Thank you. So, item number 1, apologies for absence.
Apologies from Councillor David Sims, substitute as Councillor Maureen Stockwood.
Thank you.
Can I just add, Anita Pipes from Mazar, my audit manager, is tied up at another audit committee meeting. So.
Yes, so I believe. Yeah. Thank you. Item 2, declarations of interest. Any declarations? No. Thank you. I was going to ask you all a favour this evening, given the hot weather, that we could try and finish before 11 o'clock this evening. So, seeing as it's so cool in here, it's probably preferable to be in here this evening, so there won't be as much pressure to go. But can I start by asking our colleagues from RSM to, or can I ask Peter to introduce the annual fraud report, item 3.
Thank you, Chair. This is the fraud report, and we get RSM to actually do this report, obviously to give it some added, if you like, independence in terms of our fraud arrangements. So I'm not going to say too much, I don't want to steal Chris's thunder particularly, so without further ado I'll let Chris talk through the report.
Thank you. So as Peter says, this is the annual fraud report relating to the financial year 2018-19, so the year just gone. It's a mixture of information that we draw from national information that's published by SIPFA, one of the accounting bodies in relation to the local government sector, and it's also supplemented by some local information relating to Rushcliffe Borough Council itself. So just walking through the key elements of the report. Section 4 is essentially the supporting information from SIPFA, which talks about the wider implications of fraud in the public sector, and you can see some of the statistics there that clearly indicate the fraud is a very large issue within the sector, with hundreds of millions of pounds of goods and services going missing over the course of a year. Probably interesting to note that the average value has gone down, but the incidence of frauds detected has risen over the last year, and there are particular spikes in relation to things like blue badge fraud, which is obviously very common and quite lucrative in this day and age. The council obviously itself has particular responsibilities for preventing and detecting fraud, and it has a range of internal control systems in place to do just that, and they're woven into all of the services that the council delivers. That could be fraud and conduct issues that involve council employees, elected members, as well as the general public, but also fraud that's aimed directly at the council, where fraudsters are trying to take money away from the council and the public purse. So there's heavy reliance on the council itself to make sure that it has appropriate systems in place to deal with that. One of those that it particularly maintains is its whistleblowing policy, and I'm sure elected members will be familiar with that. There have been no whistleblowing concerns raised to the council during the course of 18-19, which is obviously positive, although the council do advertise the whistleblowing policy and procedures to everybody who may be interested in them. Section 7 deals with the National Fraud Initiative, which is essentially a data matching exercise which matches data between central government bodies and the Rushcliffe data itself, and that typically throws out a range of anomalies back to the council, which are then investigated at a local level to determine either whether any frauds have been identified, or indeed whether, as you can see under section 7.2, the council single person discount, whether any errors have been identified, and that could be errors where the single person discount has either not been applied in the right way, or not applied at all. So the council have a responsibility to investigate all of the information that's sort of driven out of the national fraud initiatives, and as you can see in section 7.3, there was as a result of the 18-19 data, there was an extra 40, almost £41,000 that was billed. Housing benefits is another area that's where data comes from the National Fraud Initiative, and the table there shows you the number of matches, number of potential anomalies that were identified. But in the case of 18-19, when the council investigated those, there were no frauds or errors identified at a local level. There are also benefit fraud investigations that are undertaken formally by the council itself, but they're now undertaken by DWP and one of their compliance directorates directly, and section 7.9 sets out the quarterly referrals and outcomes of cases that have been referred to the compliance directorate but relate to Rushcliffe Borough Council itself. So you can see the numbers are fairly small in there. Internal audits also have a responsibility with regard to the fraud arrangements within the council, although it's not a primary responsibility for us to go out and look for fraud or fraudulent activities. All of our internal audit work is designed to give us the best opportunity to identify if any fraud or irregularity has taken place. So it's a key part of the internal audit planning process. So at that point, Chairman, I'll pause and happily take any questions.
Thank you. So in the supporting information on 4.2, the last point says that 3 greatest areas of perceived fraud risk were procurement, council tax, single person discount, adult social care. I was just thinking as well, some of the other highlights here were business rates fraud, blue badge fraud. As I was reading through, I was really looking forward to reading more in depth about those. Is that something that we'd normally do, or?
Typically, this is just a headline report, so it simply summarises some of the national statistics that are coming out. But obviously there is more sort of detail and more local detail that can sit behind that, and obviously, you know, blue badge fraud is particularly prevalent in this day and age. The council issues blue badges and will be aware of its own particular situations, but it's not something that we particularly sort of drive into this report. It's more of a summary report.
Yeah, I think just to, I suppose, to summarise, it's from the point of view there's no fraud or no fraud identified, probably the best way of saying it, then it's a good report from that perspective. And obviously we have to be, as management, we have to be ever vigilant in terms of all our services to, you know, make sure we've got the right checks and balances in place to ensure there is fraud prevention, which is critical.
typically that would be Peter as the executive lead.
There's a full reporting process. Normally, actually, it's chief executive that fraud get reported to, and unless, of course, there's something involving the chief executive, in which case it wouldn't go to the chief executive. But
Thank you very much, Mr. Chairman. Paragraph 7.4 and 7.5, it talks about 730 number of matches reviewed, and then it talks about 350 matches have been reviewed. So there's clearly a large number of matches identified by the DWP, some of which have been checked so far. Are we expecting them all to be checked within the 2-year programme? And when it says 18 have been identified for further investigation, when will be, I mean, is that expected to go up in number? Are we expecting to find more? Because it seems that we found 0 council tax errors. Is that because you just graded everything, or I'm not quite sure how we're getting through all that workload of the 730 matches.
well, I'd like to think we're great at everything. I don't think we are great at everything, but no. I think that what that actually means is that of the 730 matches by the DWP, there's 350 they've asked us to look at, of which we're doing, of which 18 there's still some work being undertaken. Thank you, Chair. Now, just to explain, the way we normally present this report is we take items 4 and 5 concurrently. I will start off talking through some of the issues in the statement of accounts itself. You're welcome to ask questions regarding the particular part of the presentation. We will then sort of seamlessly go on to external audit, so you can get their view. And obviously, external audit, I've spent considerable time going through the statement of accounts and the supporting records. It's fair to say it's been a very thorough audit this year, and as our view. And then obviously there's also a chance to ask them questions as well at the same time. So that's the plan. We're sort of going to take almost both items together. I'm going to start off, and Sarah's going to talk to the slides as well in terms of the detail within the accounts. So that's the plan, if that's okay with everyone. Yeah, okay. So, we've just prepared, unusually actually, we don't normally do this, just trying to think of the best way of trying to present the information, because as you appreciate, you know, I'm sure if you were struggling to sleep at night, this would have may have helped you, I don't know, but there's a lot of information in there, and I do appreciate, particularly those of you that are new to the group, there's lots of things to pick up, and the statement of accounts is a reflection. It's statement of accounts 2018-19, and often it's going to reflect a lot of the things that have happened during the year. So members that have been at the council for the previous 12 months will perhaps appreciate a bit more some of the issues that are within the statement of accounts. Those of you that are newer to the council, there are issues in there that you perhaps may not have even come across, and you're more likely to be a bit of a sponge in a way, just soaking up a lot of the information, and there is a lot of information there. So. Right, so in terms of an introduction, so we've got the new auditors, so we have Mazars in. As I say, it was we felt a fairly intense process. We've been through I think the finance team are ready for a holiday now after the audit, but it was a welcome challenge, and I think there's certainly learning experiences for both parties, and once we've gone through and got the account signed off, we'll be having a wash-up meeting with Mazars just to talk through, I think, lessons learned and how we can make the process perhaps a bit smoother. From our perspective, hopefully Mazars will support this. They were completed on time and to a high standard. There were late amendments due to the McLeod judgment. I'm not going to talk about that. I'll let Mazars talk about that particular element, because it's something that they focus on in their report. in terms of the narrative, so when you look at the financial statements, so now we're going to start talking to the financial statements. So I'm just going to take you and the page references, because there are two lots of page number, and just to confuse you even more. But we're going to talk to so at page 41, which is the, if you like, the official number, and we're going to talk to those page numbers, just so that it's a bit clearer for you. So page 41 is the start of the actual statement of accounts document itself. So just check you all, is everyone there? Yeah, you're all great. So when you look at the statement of accounts, there's something called the narrative right at the front, which is in essence designed to highlight what are the key messages in the statement of accounts. But it's also a bit like, if you like, a company report, in that it's designed to match where you're at with your operational performance and also your financial performance. So that's what it does. This year, those of you, if you recall the accounts from last year, I don't know if you do, but we did make some effort to actually improve the narrative this year to make it a bit more, as I said up there, aesthetically pleasing and a bit easier on the eye, really, and that's what we've done. So if you looked at last year's accounts, it's a bit more, lots more tables, and we've put more sort of diagrams and pictures in just to make it a bit easier to read, and hopefully you enjoyed the read of the narrative, if nothing else. And as I say there, so pages 46 to 50 is really the if you like, the performance section of the accounts, and it talks about things like risk as well, so there's a risk section. And when we pull together the narrative, the auditors work to something called a code of practice, and we work to a code of practice produced by SIPFA. So we have guidance. There's certain things that we're supposed to include. So don't complain to us about the length of this document, because we're applying if you like, best practice. And those of you that actually do the county audit will see a similar sized document, no doubt. So you've got double the work in that regard. So we are applying good practice, and when the auditors look at what we've done, they're also checking that we are applying the code of practice. So basically, when you look at local authority accounts, they should all be broadly the same in sort of structure and the same types of things. Different councils will have some things that are different. So some councils have housing revenue accounts if they've got housing stock, so you will have other things within those particular accounts. It focuses on revenue and capital. So when you do get to read through the finance bits, you'll see we split out revenue. So on page 50 there's a section on revenue, and as you go down on page 52 you can see there's some capital expenditure and income section. And as you can see there, we've got some nice pie charts, we've got nice graphs in there just to make it at least a bit more interesting for the reader of the accounts. And really, my terminology in terms of what do the accounts show, and really our term is a biography on the finances for the year. It's showing you throughout the year that you've got the income and expenditure account, what income and expenditure was spent, and then you've got the balance sheet, which is your photo picture, if you like, of the accounts, the balance sheets at the 31st of March 2019. And really, when you look at these, and this is where I say the newer members are at a bit of a disadvantage, it should reflect a story, the things you're seeing there. Do the numbers when you look at the accounts, you think, do the numbers make sense in terms of what's happened in the year? If we've sold buildings, if the assets gone down, if we've purchased buildings, have the assets gone up? There's all those sorts of things you need to be thinking about that bigger picture, and that's what you need to be doing when you're looking at these figures. So, in terms of the statements, the actual statements themselves, there are 4 what we call core financial statements. So you'll see from pages 77 to page 80, you've got the company income and expenditure statement, which is effectively like a profit and loss account in layman's terms, I guess, or private sector terms. And again, that's cumulative for the year. There's what's known as the movement in reserve statement. We call that MERS. As you soon, if those of you that are now getting more used to the council, we're full of acronyms, and that's one of our acronyms in finance, the MERS statement. And it is what it says on the tin. It shows you the movement in usable and unusable reserves. And as I say, the balance sheet, you've got that at page 80, and then you've also got the cash flow statement, page 81, which shows you how cash is used. The other thing to note when you look at the statements, I'll quickly go to, so we go to page 77, you'll see we also have things, we also show things like the comparatives, so you get a feel for how things have moved throughout the year. So you'll see the 17-18 and 18-19 comparatives. You'll also see there's often notes, so when you're looking at something you think, well, what does that actually mean, or is there any more information? If you go to that note, so in that first case on page 77, it says note 5, other operating expenditure. If you go to note 5, you'll see some more detail as to what that other operating expenditure is. So that's how they all link together. And then also we've got what's known as the non-core statements. So we've got things like these, and these are the collection fund is unique to local governments. That's a ring-fenced account for when we collect council tax and business rates, and that's something that is unique to local government, not something you'll see obviously in the private sector. And also we have group accounts. You see those on pages 144 to 150. So, for example, if you have group accounts when you've got, for example, another company or the companies. So in our case, we've got Streetwise. So the Streetwise figures come together within what's known as the group accounts. And as I mentioned before, the local authorities or the local government public sector is full of its own terminology, its own acronyms. And then to help you, if you're struggling, you see something, a statement, a word, a phrase, it may be in the glossary of terms, which are at the back. So you can see in the glossary of terms what those particular certain things mean, to give you a bit more explanation. Right, okay, so I'm handing over to Sarah now. She's going to talk a bit more about some of the detail and the key messages.
Okay, so at Cabinet on the 11th of June 2019, the Council reported an overall underspend on direct costs of 548,000, which you'll see on page 51 of the pack. That table summarises the areas where those underspends were. Mostly they relate to planning applications, investment income and income from car parks. This contributed overall to an increase in reserves of 1.31 million, which if you go to Mayor's statement on page 78, you'll see that increase in the reserves that matches up to that. Central government grants on the table on page 51, you can see from this table that our grant income has reduced significantly. Overall, we've seen a reduction of not 1.3 million. The majority of the reduction is in revenue support grants, but we have then seen an increase in new homes bonus of 1.3 million. On page 77, the comprehensive income and expenditure statement shows other operating expenditure, and the movement between the 2 years is 2.562 million. This overall relates to overage at Sharp Hill and disposal of some units at Moorbridge. On the financing and investment income and expenditure line, the overall movement between the years on that one is 3.573 million, and this is mostly due to an increase in rental income and service charges, plus in the previous year there was a downward revaluation on some assets. The surplus and deficit on revaluation of non-current assets currently this year is saying 3.363 million, and this is in relation to revaluation of non-current assets, mostly the Arena and Cotgrave. And finally, in actuarial gains and losses, we have a figure of 4.902 million, and this is changes in actuarial assumptions, so relating to demographic and financial assumptions that the actuaries make. If you turn to page 80 and the balance sheet, we can see from that the council's net worth has increased by 10.6 million. So it's gone up from it's gone up from 12.836 million to 23.45 million. This is mostly in relation to upwards revaluation of property, plant and equipment and investment property of 7 million, and an increase in short-term investments of 4 million in relation to additional Section 106 money that we've received. And you can see from this chart that our net worth, I think that's not right, oh there you go. Our net worth is gradually increasing, and this is in correlation to our pension liability. So as this decreases, our net worth increases. And then to the supplementary statements on page 139, starting with the collection fund. The headlines on that are that the collection fund is now in a deficit position of £714,000. This is due to significant volatility in business rates to do with appeals and just rates of collection in general. And on page 143, the group accounts, this incorporates Streetwise Environmental Limited. And you can see from that that we have an overall increase to the council's net worth of 122,000 that's contributed to by Streetwise. So overall, it's a positive position to report. We've had good feedback on the quality of the working papers from the auditors. And the auditors will also give a conclusion on value for money. And it's well done to everyone involved, particularly the finance team, who's worked very hard this year. Did I miss that one? Okay. I'm just going to go back to a slide that I missed. There are some amendments that you will have already received, one previous to this meeting and the two that I've handed out this just before we started. So the pensions note on page 112, there was a slight amendment to two of the figures due to the McLeod judgment, and the other two amendments are in the narrative cross-referencing to the main statement of accounts. So page 50 and 53, two small amendments to those as well. Was that my last one? Thank you.
I'd probably just at this stage echo some of the sentiments that Sarah and Peter have made, really, in terms of the quality of the accounts, the fact that they were delivered to us on a timely basis. The narrative in there sets out, I think, a good story of the council's journey. And I think really just echo with some sympathy comments made by colleagues around how user-friendly they are as a document. And just actually that's driven by statute. There is unfortunately nothing we can do with that. It's actually, as a document, it's very difficult for you to be able to tell a story to your electors about what that actually says about the council's finances. But that's the statute for you, unfortunately.
I mean, I don't know if you've just to add to that about the accounts. There is a review that James Brokenshire has just launched. I don't know if you've read about it, but it's looking at both the audit sort of practice generally and also looking at trying to streamline the accounts. To be fair, we've been talking about that for a long time, and if I'm honest, the accounts seem to keep growing rather than getting any shorter. But so it is an ongoing battle, and it would make our life easier if they were a bit easier as well. But unfortunately, there's one thing I will say. You can see there's a lot. You can see it's a big document. There's a team behind that produces all this information, and there's a lot of effort and work goes into it. Not just producing it, but also we have to produce really good working papers for the auditors, because frankly if we don't, they'll well, probably would just walk out, I guess, or something like that if they were extremely poor. But we'd be facing more sort of challenges at this meeting if we had poor working papers, it's fair to say.
Chair, if I may, I sort of commented in my last section on the accounts themselves rather than my audit completion report. So if members are happy to take that as read, that's fine, but we didn't go through our document in any great detail. So just for a few salient points, if I may, Chair, that's all. I'm conscious. I think the flavour you should take from our audit.
Don't sign this letter.
I'm not.
Excellent.
I'm just conscious of the fact that it's our first year with you as auditors, so I think it is worth just explaining a little bit more about the process. So I think the flavour you should take from our audit completion report has been summarised very neatly by Peter, I think, at the moment. Actually, that's a very clean audit report in there. In terms of the things that you should note from that report, the only adjustments to the draft accounts presented to us by audit by the team here were that big pension adjustment, and that big pension adjustment, the McLeod case adjustment, is nothing to do with Rushcliffe. That was a court case that happened to be settled at the time that impacts on all local government pension schemes. So every local government pension scheme have had to, unfortunately, every local authority, have had to go and get another pension valuation done to reflect that. So just for avoidance of doubt, that's nothing to do with your process. That was unavoidable. I think the other things to say there is that's the only adjustment. We have only one slight potential adjustment that we could say we could make a change to the accounts around some depreciation calculations, wholly immaterial from my point of view. So we're not suggesting that does need to be made. And we have, pleasingly, I think, and hopefully supporting the work that your internal auditors do, nothing to note in terms of internal control recommendations. So nothing we've seen from our work with the finance team to suggest that the processes aren't working properly or aren't designed well. So I think it's a very clean audit report. There are also comments in there on our work on value for money, which I guess just for avoidance of doubt with members, our remit is to say, do you have appropriate procedures in place to ensure the delivery of value for money? It's not our remit to say you do deliver value for money. It's around processes and procedures. And colleagues will see in there's a couple of comments on the areas that we look at around financial resilience, a key risk for all local authorities, and also around commercialisation. It's something that more and more local authorities are having to move into just to balance the books. And again, under both of those banners in the section of our report, we give you a clean bill of health, really. So taking on board the comments from the team here, yes, it has been a very robust audit process. I think a first-year audit will always be when you change auditors. Your previous auditors, after 5 years, will have built up a lot of historical knowledge about the organisation. Second year does calm down a bit, I promise you. But actually, I would only second the comments made by management team about the process, and subject to waiting from one letter from another pension scheme auditor, we're done and ready to sign our audit opinion by the deadline. So lots of positive assurance from us.
Thank you. I look forward to working with you.
Thank you, Chair. So, I suppose particularly for the new members of the group, risk management we report twice a year. There's normally a report around November time, which tends to focus on what the risk management strategy is and are we happy with the risk management strategy in the process, as well as where the risk register, a bit like this report, you'll see the risk register again and any changes to it, so I'll have that as well. And so this report is really if you like, in a way, the outturn position in relation to where things stand. It was planned actually for the May meeting, but because the committee was in a state of flux, we decided to delay the report, and it's been reported to this meeting. So the report was effectively deferred, and has now come to this meeting. In terms of, I suppose, your role for those particular of you that are new, it's really in terms of this report, is looking at particularly the risks that are highlighted, or the risks that you think perhaps should be there that might be recommended. You've got views on that could be recommended as being added to the register, or are there risks where you think, yeah, I can see that's a medium or low risk, but actually it should be a high risk. So there's those sorts of things that you perhaps need to consider when you look at this report. One thing I will say, that I'm sure you've all encountered risk management probably in your own work life and dealing with risk, but it isn't an exact science. So we try and almost put it as an exact science. We have this sort of matrix, so we sent out, I did ask for the matrix to be sent out, which hopefully you've all received separately, just to give you an idea what. So within the strategy, we you know, effectively that matrix demonstrates your levels of risk tolerance, and so it's not untypical. You find this at most organisations where you've come across risk. You have one axis which oh wait, I'll stop till everyone's got the document. You'll have one axis which focuses on probability, and another axis that focuses on impact, and then you have a scoring mechanism in terms of whether it's low, medium or high. Obviously if you get too highs, then you're in the far quartile, the highest risk. So if it's high probability and a high value impact, that's treated as high risk. So that's the mechanism we've gone through. And bear in mind, this has been an iterative process, so throughout the years, you know, certainly since I've been here and before, these risks have changed, ebbed and flowed over time, and that's the nature. It's nature of the beast, nature of the, you know, of the life we work in. You know, we did have on this at one point. You know, we had risks surrounding, for example, Grenfell at one point, when, you know, so that hit this, so influenced by the external environment. But as we look at those and we say, well, actually we haven't got any high-rise buildings we're clad in, so it's a low risk for Rushcliffe as opposed to other councils. So it's understanding what's affecting you locally, as well as there is a national context as well in terms of the more strategic and corporate risks. And you'll see that in the register, particularly on the corporate risk, where there's perhaps more influences coming particularly from a more national sort of level. The other part of the report normally it does focus on emergency planning. Now, Karen Emery is our emergency planning officer, and she works for the county council, and we have her for, I think, around 3 days a week. And so from paragraph 3.8 onwards, I'll talk to that, but if there's questions that I cannot answer, I'll take those back and we'll get responses separately. One other point I'd like to make is that internal audits every other year do look at our risk management arrangements as well. So they'll look at the processes we have in place, and if necessary make recommendations if they feel there's an improvement, if improvements are needed. And I'm pleased to say we've certainly in recent years we've had generally a clean bill of health, I think, from internal audit, and they are quite happy with our risk management arrangements. In terms of the process at the council, EMT review the risks on an ongoing basis. So, as I say, the whole thing is in a state of flux. It can change at any given time, given any particular situation, if something arises. And then, so this really, again, when I mentioned the issue of like a balance sheet at the moment, this is the risk management balance sheet, if you like, in terms of where risks, the profile of risk sits at the council at the moment. So, Appendix 1, I'll just take you to that. That's really where I suppose the nitty-gritty of the report is really. So on pages 168 to 169, you've got those corporate, broader, strategic type risks, and then on pages 170 to 171, you've got the key operational risks. And as I say, all of this can change any given time. It's your role really to look at these risks. If you've got comments on them, if you think there's things on there that perhaps should be on there, and then we'll take those views back and if necessary make either the appropriate adjustment or come back perhaps with a reason why we perhaps don't necessarily agree with the rationale. So that's really what it's about. So I suppose really it's open to the group in terms of, I don't know if you've had a chance to look at the risks, if anyone's got any comments at this stage. I appreciate it's early doors in your role on the group, but if you've got any issues or comments that you wish to make. The report itself, what we do just to evidence what management team do, we do say, so if you look at page 164, you've got paragraphs 3.6 and 3.7, we talk about risks where they've been removed, and we've also got risks that have been amended. So that's sort of, if you like, just to give transparency in terms of the decision-making process for management team, just to, you know, shows you what's changed since the last time the register came to this group.
Councillor Verdi.
Probably an observation more
Well, the answer to your question is yes, there's more detail behind the scenes. Clearly, we have to be careful. We have to get a balance between how much information we are giving you and so we're trying to give you more of a high level. Now, if you're asking me you want some more detail on something else now, then obviously I can go back and, if necessary, dig out what the information you require, if that's what you're asking. But it's difficult. I suppose we're just trying to balance what's in the report, because there's already quite a lot of information in there, and we start giving almost too much information. It's trying to get that balance between seeing the wood from the trees, and that's what we're trying to do.
Thank you for that, Peter, and I fully acknowledge that. Obviously, it is a balance between the detail here, but I personally, on this risk register, even if we had a high-level summary of the quantifiable element, would find it very useful. I don't want all the operational detail and to go into all the paperwork, but at least some sort of indication of failure to mitigate that risk and what the impact would be very helpful. But just in summary form.
Okay, well, for the next report, I'll look to, as an action, incorporate that. Thank you.
Can you fill me in on how you get these particular risks? Where do they come from, basically? So how do you decide on which is the corporate risks and which are the overview risks?
Well, they've been developed over history, really. Okay. So it's, we look to, over time, we look at what's the larger impact issues. So they're the more corporate type, and they, as I say, they develop over time.
So it's not something that's decided at cabinet. And then when something is a red or an amber, is there an action that follows? Is there some sort of kind of process?
To be frank, it does depend on there are action. We do have mitigating actions. Some of the actions, particularly the corporate ones, can be more difficult in terms of trying to deal with them, because if there's external factors involved, it'll be something like, for example, if I talk about external finance and government funding, there's not a lot we actually can do. I mean, we can write, we can inform consultations, we do things like that. But in essence, it's almost like our action is trying to keep a watching brief and make sure we're up to speed with things, so that we can try and anticipate and do sensitivity analysis. So as a plug, when you come to the budget workshop, hopefully this week, and it's another nice evening, I think, but that's by the by. But for those, particularly the new councillors, as part of that session, you will see there where we do like sensitivity analysis surrounding some of, particularly on the financing side of things. Sorry, just one thing I was going to add, just as an amendment to recommendation B. It says, consider the actions taken to review the risk management arrangements. That's where it should end, because it does. And it says, and implement internal audit recommendations, but there are no internal audit recommendations in this particular report. So, just for the record, we are just amending that recommendation.
Okay, so we'll delete B.
No, delete the from and.
Oh, from and.
Yeah.
So just to be clear, on page 167, recommendations are A, the contents of this report are noted, and amended B to read, consideration is given to the actions taken to review the risk management arrangements, and then C, the group consider the work of the emergency planning officer and endorse the work of the local resilience forum. I'll close those recommendations. Seconder, Reg, thank you. All agreed? Thank you. Agenda item 7, capital and investment management outturn 2018-2019. Peter.
Okay. Thank you, Chair. Well, I've got 2 guest speakers for this particular report. So I've got Sarah and Leanne. Just to introduce you to Leanne Ashmore, who is now our Executive Manager for Transformation, and particularly has responsibility for property. So obviously there's some property aspects within this report which Leanne will talk about, and Sarah will start off the report talking about the more treasury aspects, financial treasury aspects of the report.
Okay, so on the 4th of December, we took the mid-year report to corporate governance group. This report covers treasury and commercial investments, and this report covers the complete year 2018-19. The treasury side's quite technical, so I'll try and make it as plain in English as possible. And in September and November, there will be some treasury management training that will be useful for you to attend. And one key thing to remember during all of treasury management is the acronym SLI, which stands for Security, Liquidity and Yield, and it's in that order of priority that we make our investments. If you turn to page 174 and 175, we report on the expenditure position of our capital programme, and it was underspent by 18 million, as reported to Cabinet with various reasons and explanations. You can see those on page 53 of the statements. 13 million of that 18 million underspend has been carried forward into 1920. Also, on these pages you can see that there has been no increase in borrowing need, as our expenditure this year of 6.748 million was fully financed by capital receipts, grants and reserves. And as our expenditure was fully financed, the capital financing requirement has reduced by 1 million, which is the MRP charge, down to 8.3 million. And the capital financing requirement is our underlying need to borrow, and currently we do not borrow externally. On pages 176 and 177, we have the ratio of financing cost to net revenue streams. This is currently negative, as previously mentioned, we don't have any borrowing costs. At paragraph 4.16, we show our upper limits on our exposure, and you can see from this table that we're below on all of those limits. Paragraph 4.17 also shows the upper limit on sums that can be invested over 1 year. We set ourselves a target of 14.2 million, and we're currently only at 6 million. And the table on page 177 shows a summary of all of our balances that are invested with counterparties and the rates of return that we've achieved during the year with those. Paragraph 4.2 or 4.20 shows that we've had a higher rate of interest return in the last year. So we had a budget of 259,500 and our actual receipts were 403,167. And this links to the underspending capital, and we've had more cash to invest, as well as maximising our interest receipts and our rate of return. And with that, I'll hand over to Leanne.
I'll just quickly talk through the asset investment strategy here at the bottom and update you on the 2018-19 position. So we have the asset investment group, and through that group we acquired 2 new properties in 2018-19. They were the Co-op for 1.4 million, that's on Trent Boulevard in West Bridgford, and Boundary Court in Castle Donington, which is 805,000. So they've in making those acquisitions, we take a risk-based approach, and if you look to the appendix on page 185, 86 and thereafter, it shows the appraisal that we undertake before making a decision to acquire a property. One of the things that we look at as well is how it balances with our existing property portfolio, making sure that we're not investing in just one sector of the market. And that can be seen in the pie charts on 180 and 181, which shows we've got a reasonable split of asset investments against industrial, office, retail and other. Going back to 4.29, there was a capital pot of £20 million allocated to the asset investment strategy, of which 4.761 million remains outstanding. And this table shows the split across the investments that we've made and investments that we are due to make, and the projections going forward. It was the council's intention to generate £1 million from additional rental income, and we're aiming for 2023-24 that around 84% of that £1 million will be achieved. It was recently approved by Cabinet to carry forward that £4.76 million on the asset investment strategy into 2019-20 for commercial acquisitions. The council took a decision to slow down acquiring assets given the market trends, and we're looking at investing in other areas as well, some schemes that we're more in control of, such as in Bingham, some Morbridge Road, some industrial units there that we're looking to buy when they're developed. So taking more control on a local level of the investments that we're making. So in conclusion, we're still on target with the investments that we've made, and we've still got, as you can see on that table on page 180 and 181, that we're making heading in the right direction to achieve that £1 million extra income that we set for ourselves. Thank you.
Just to add a few comments, really, it's obviously a very sensitive topic, commercial investments, and I think David didn't really touch on it a great deal, but certainly if you look at the audit report, the auditors are particularly sensitive themselves, I guess, in terms of what councils are doing, and particularly what governance arrangements are in place, what checks and balances are in place. And certainly this year and last year with KPMG also looked at our processes then. We've got a sort of, I suppose, a clean bill of health, it's fair to say, without putting words into your mouth. But,
no, it is. It's a clean bill of health from our point of view, and I think from that sort of, we talked about it briefly under the commercialisation heading, effectively, where the authority is looking to generate revenue streams from other areas. And actually, from our point of view, it's around the governance processes you have in place around those investment decisions and how you're managing risk effectively. I think your approach is slightly lower risk to some local authorities we see who've gone very big in out of area property investments, which I think in our opinion would increase the risk significantly for no other reason than out of sight, out of mind effectively. So no, it's absolutely a clean bill of health from our point of view on those areas. It's something we'll continue to keep under review.
just to add as well, the reporting that we do, again, SITFA have produced more guidance to tighten up the reporting. So the reporting we are doing is really so it's compliant with, if you like, what SITFA are recommending, and obviously we'll keep a watching brief in terms of any recommendations that come forward in terms of if there's any further tightening up. And as I say, we do have what we consider a balanced approach to this. And I've said this to the group before. Obviously, when we do invest in property, it's not risk free. As your way is, nothing can be risk free. But what we're trying to do is mitigate risk by having a balance of investments and ways. And so when we look at our investments, we've got our cash investments as well as our property investments. So we're just trying to get it's getting a reasonable rates of return. But at the same time, we've got to look to protect the capital for the authority.
Leanne, you know the site in Bingham they were talking about doing the investment in? Is that going to be linked to the leisure centre as well?
No, it's close by. It's just to the back of it. So if you imagine the leisure centre
Yeah.
site, it's just sort of to the back on the industrial estate. It's an area of land that we got given as part of Section 106, and then we bought the other half of the parcel of land. We sold it on the market for development, and once it's developed, we're going to buy back some of the units that they're going to develop to put in the investment fund.
Okay, thank you.
Okay.
Sorry, I've not been on the group for a while. What happened to the Point as an investment strategy building? We no longer own it, or?
No, we do own it. We did actually bring a report, a separate report, probably 12 to 18 months ago on the Point specifically because it was requested. But the asset investments we're talking about are those that we've done actively using the £20 million asset investment fund. So that's why the Point's not registered there. I have to say I will have to double check the Salford one because that percentage doesn't sound right.
Yeah, I can check and reissue the table if necessary. That does look a bit low.
So it's hard. Taking on board what you say though, what we do is again a bit like properties in a way. It's about security of investment. It's about a range of investments. So we invest in some of the local authorities. Obviously, they want to borrow at lower rates around the market rate, but it's about obviously you'd hope, unless it's Northamptonshire, that the local authorities themselves are relatively secure, or the most secure that you could get, other than I guess central government. Hence, you tend to have there's that relationship between levels of security and rates of interest. The other point to note is it does depend on the timing of when you do the investments. So obviously, if for example we've done an investment and then interest rates rise, obviously the on-call accounts will reflect the higher interest rates. So there might be some timing issues when interest rates have changed.
The general question you've raised that if we borrow to fund investment properties, it's a risk. Is that correct? But if we borrow to build the leisure centre, it's less of a risk. So, I mean, as an organisation, we are using our capital to invest in these investment strategies, whereas we're borrowing to fund the community facilities. Yet, that's apparently a low risk thing, and yet the reality is it's the same amount of money on the sheets overall. If we did it the other way round, it would be a controversial risk. But if we do it this way, it's apparently okay. And I just really to me, as looking at the organisation as a whole, it's exactly the same outcome, but one way of presenting it is more risky than the other. So I don't quite. Do we look at it as the whole organisation in that way, or is it just smoke and mirrors in the way that the figures are presented?
Smoke and mirrors. What are you trying to say? To be fair, it's about. I mean, obviously we haven't borrowed anything yet, and we try and defer borrowing as long as we can because it doesn't make sense to. Fundamentally, it doesn't make sense to borrow. You should, unless you suddenly think interest rates are going to hike up, and which there's no indication of that at the moment. So really, it's just trying to, from our perspective, getting a balanced approach. We don't. If I'm honest, the idea of borrowing and investing outside the borough, personally, I don't necessarily agree with SITFA on it. And to be fair, you can actually do it, but you've got to have a justifiable reason to do it. And if we did it, we would have to be transparent in why we've done it. So in our report to you, we would be saying we've borrowed £5 million invested in a travel lodge in Edinburgh, wherever it is, and so it's £5 million in Edinburgh, but we have to be clear on the reason we've done that, and obviously we'd have to take into account all the risks associated with it, which both those that are property risks and financial risks, and that would have to be balanced in the round with everything else. To come back on that particular point about the risk side of things, the purpose of the table at page 181 is really to show whilst investment income is an important to us as an income stream, we're not necessarily overly reliant on it because we do have other income streams, and that's why we have in the report we say that we don't want it to exceed 30% of our overall income. Those figures there actually can halve those when you take into account council tax and business rates income, those percentages, because that's in actual fact, and again another plug for the session on Thursday night, not to be missed, is that when you look at our income streams, our biggest risk, or our biggest income generator, if you like, is council tax. And after that we've got, and business rates is also another area of income as well, but council tax being the biggest.
Just before we wrap up, you referred to an 18 million underspend. Did most of that involve partnerships, or whatever you want to describe it, with third parties? Because in previous years, when we've been involved with sort of third party elements of it, it's that bit that we can't control. So there may be delays caused by other parties involved that is not directly responsible by us.
The majority of the underspend, the 80 million underspend, I believe, was the asset investment strategy and depot relocation, because that was delayed until further into this year. There is an explanation on page, I'll find it, 53.
Yeah, I fell asleep.
On page 53 that does explain what the slippage is in the programme. So it does confirm that it's the asset investment strategy mostly, and redevelopment of the depot site, the works in Cotgrave, and affordable housing.
Okay, thank you. Okay, on page 173, 2.1, the recommendation, it is recommended that the report is agreed by the governance scrutiny group. It's not for noting, not for voting, but we agree it. So how do we agree that? I've not seen that phrase before. Just nod our heads. Or...
Vote.
Show of hands. There we are. Okay. Thank you. That's unanimous. I think that actually concludes this evening's business.
Sorry,
Doesn't it?
Chair, just one other thing. We sent that out late, which is the work.
Of course, the work programme. Did you all receive an email
Should have.
on the work programme?